What's up investors, Sneers here. Elon Musk and the Twitter acquisition saga just can't end. Every day it seems we got more and more news, and I'm sure that by the time I will finish editing and uploading this video, there will be even more news about it. But what I want to do in this video is to cover not just what is the status with the Twitter acquisition and how what Musk is doing there is maybe nefarious, but I want to go back and revisit many of Elon Musk's sagas around financial instruments and maybe doing some financial gray things. So we start with a short history of the many Elon Musk sagas, and of course many of them around the cryptocurrencies, and then I will get back to the Twitter thing. So the first thing to look at is the famous $420 funding secure tweet. As you can see here, this tweet from August 7, 2018, when Elon Musk said he's considering taking Tesla private for $420, funding secured. He later said it was just a joke and, all the meme of 420, and then later he also sold Teslas for a price like $69,420. It's all a joke to Elon Musk, obviously. I also enjoy these jokes, don't get me wrong, but getting this kind of tweet out is very meaningful to investors, especially the tweet he tweeted later. Shareholders could either sell at 420 or hold and go private. Now, this makes it seems even more serious. Doing this kind of tweet for a publicly traded company is very meaningful, as the price will follow it. It seems like he's doing an acquisition of the stocks. So many risk arbitrageurs and other players in the public markets can see this kind of tweet from a CEO, from a majority holder, is not just anyone from the street, and that have material effect on investors. And this saga didn't end there. In 2020, a judge deemed Musk funding secured tweet false and misleading. A trial awaits. And this saga will roll on because this is a serious issue, and this is the first time Elon Musk got to the highlights of maybe market manipulation of some sort, still pending trial of course, or trying to meddling with financial instruments. The next step I want to talk about is of course all the saga with cryptocurrencies, and it all starts with Dogecoin. This tweet from December 20 of 2020 is when Elon Musk first tweeted about Doge publicly, and it was followed by many other tweets, as you can see here. But I want you to look at this date, December 20, 2020, and look at the Dogecoin price. So if we take even a more broad view, you can see it was traded close to nothing, and this is when he tweeted. Here it is, December 20, 2020. And then the rise started to happen at the end of January 2021. I know this doesn't seem so significant, but it is significant in percentage. That's because then, let's broaden the view a bit more, then it rose like crazy after the boom and the extended tweets of Elon Musk about Doge. And I wanted to take a look and just to remind you that he started before anything was happening with Doge, because he then tweeted things like that. Lots of people I talked to on the production line at Tesla or building rockets at SpaceX own Doge. They aren't financial experts or Silicon Valley technologists. That's why I decided to support Doge. It felt like the people's crypto. Now, I don't want to outright call him on that, but at the time it was nothing. Doge wasn't held by pretty much anyone. The holding of Doge started after his tweet, and then it started to rise significantly. So this tweet is very weird, and it didn't provided any proof or any significant evidence for what he said here. But that's not where the crypto saga ends with Elon Musk. A few months later, Tesla announced that it had purchased a massive amount of Bitcoin. At February 8, 2021, this is a few months after the Doge saga started, Tesla bought $1.5 billion in Bitcoin, and it announced its plans to accept it as a payment, which then accepted. Tesla now accepts Bitcoin in the US. That's March 24th. Now, this kind of news made a significant run on the Bitcoin. A massive company like Tesla accepting Bitcoins is a significant event that gives Bitcoin so much backing behind it and so much tailwind that it can move forward, and justifiably so, the price rised a lot. And that's when Elon Musk Tesla sold Bitcoin in the first Q. They sold it for $272 million, almost 10% of the holding. And it made a significant increase in the revenue of Tesla for that Q, which is great. He made an investment in Bitcoin, he believes in the product, and his belief in the product led him to announce that Tesla will accept Bitcoin as payment, and it made a great run for Bitcoin. And then he sold some of his position. But what happens next? A classic rug pull. On May 12, just 2 months after the initial announcement of purchase of Bitcoin by Tesla, Elon Musk said that Tesla will stop accepting Bitcoin for car purchase. Now May 12 is just 3 weeks from his April 26th announcement that he sold 10% of his holdings in Bitcoin. After this announcement, the Bitcoin price plummeted a lot. And of course, this happened after he made a great revenue on the holdings he had in Bitcoin through Tesla. Now, is it something bad, pump and dump or something like that? We can't really say that. We are not judges. I am not a judge. And I can't say that it was nefarious in any way, but it looks weird. And that's the point. Nobody will ever be able to say that this is some sort of a crime or he tricked his followers or anything like that, because cryptocurrencies is not regulated, so it will never get to a judge. And now that we covered the $420 secure fund tweet, then the dogecoin run, and then the Bitcoin rug pull, now we get to the main story, which is the Twitter acquisition. And in this case of the Twitter acquisition, this is a heavy stuff. This is not a place where someone can just run around and do all those kind of tricky things. You may think, but Elon Musk is a different kind of person. After his announcement of acquisition, a few days ago on May 13th, Elon Musk tweeted this: Twitter deal temporarily on hold, pending details supporting calculation that spam/fake accounts do indeed represent less than 5% of users. This sent the Twitter stock plummeting. And there's a lot to unpack in this tweet. First, what does it mean temporarily on hold? You can't put on hold something that you signed. It's not like you told someone, maybe I will purchase, let's talk about it. No, it's a heavy document. Here it is from the SEC that you're signed on a merger with all the funding, with all the board approving it. It's not something you just can say, oh no, that's on hold. No. And the other part of this tweet, when he talked about spam/fake account, like it's something new to him. No. He's tweeted on April 21st, that's 3 weeks before that if our Twitter bids succeed, we will defeat the spam bots or die trying. So he was very well aware of the situation that may have been with spam/bots. This is not new to him. Now his tweet about the spam bots triggered Parag, the current CEO of Twitter, to have a thread about the spam bots and how Twitter handles it, and he really go into detail here. I will just give you a summary of what he says here. It's very hard to differentiate accounts that are bots versus real users, and there are a lot of mechanics in it, and a lot of the data that helps Twitter know which account is a bot or a real user is an internal data that they don't reveal outside. And even if there are more than 5% of the accounts on Twitter being bots or spam, that's not what Twitter ever said. I did a deep dive analysis on Twitter over a year ago on March of 2021. You can see it here. So I'm very familiar with all the terms and what they announce. And part of what they announce is MDAO, the daily active users, but the M there means monetizable. And this monetizable part means that they only count the accounts that they are sure are real people as monetizable. It doesn't mean there aren't more spam accounts within Twitter. It just do not monetize them and do not take money from advertisers for them. And that's what they always been saying. And that's the point when I say less than 5% spam accounts. That's on this measurement. That's on the MDAO, not the entire account. And that's why Elon Musk saying in the same tweet from May 13th, he says, to find out, my team will do a random sample of 100 followers of at Twitter. This is beyond crazy. You're an engineer, you know 100 accounts is not a testing sample you can really work with, and this is never what Twitter said, which leads me and many others to believe that Elon Musk's purpose doing that is completely different. He's not worried about spam accounts. He knew about them before. He is able to read the SEC filings and know that they mean the MDAO. He is able to read Parag thread. This is something else completely. Now, before I mention what I and many others think that really happens here, I want to take a look at this tweet by Peter Rosell, who took the SEC filing of the merger acquisition of Twitter, and he found a clause that says here and here, and no longer subject to business due diligence. Basically, this clause in the agreement says that Elon Musk agreed not to do any further due diligence. It's part of the agreement. He can't go back from it now. If he wanted to do due diligence, which is very normal for acquisitions, he could have asked for it in the agreement, but he waived his opportunity. So doing it now is breaking the law, which can lead Twitter to sue. And let's get to the scenario that most of us think that Musk is doing here. The hypothetical scenario, and of course this is completely imaginary, don't sue, but what hypothetically can happen here is that Elon Musk wants to get the price down. Since he saw all the markets going down so massively in the past few weeks, that he thought that he got a bad price for Twitter and he wants to get it down. He wants to renegotiate. So he got this Twitter spam and bot story, which is completely made up for this reason. So we will be able to negotiate. Another thing is in the agreement, he's agreeing that if he or Twitter side will terminate this acquisition, they will have to pay $1 billion reparation. Now, $1 billion is not enough to deter Elon Musk, especially given the better price he may get for Twitter if he push hard enough. Because the chances for Twitter to get out of it alive are very slim. Since Elon Musk announced his acquisition, the first thing that happened is that Twitter executives got ousted of the company. That happened May 13th. And losing high management like that will harm the company. And it didn't stop there. On May 18th, just 2 days ago, Twitter lost 3 more top executives. And this erosion of the company is very harmful and may strengthen Elon Musk's position. Because even if Twitter have the law to their side, they will have to sue. And while this litigation will take place, Twitter will lose its position completely. They already lost a lot of executives and a lot of employees, and stock is plummeting and their position is very bad. And this litigation can take years just to get Musk to pay $1 billion. By that time, the amount of value that Twitter will lose as the company will erode away, it just doesn't make sense. So Musk may be able to say, that's okay. Let me take the purchase sale of $43 billion just for $35 billion. You will get better that way, and so do I. And we will not do this all litigation and court thing, and the company will keep on living. And it might be tempting for the board to decide that. But as I said, this story is running really fast. And just today we got this headline. Twitter deal is going ahead, executive said. So in a all-hand meeting in the Twitter company, the executive said that the deal is still going on and they won't renegotiate the agreed upon price of $54.20 per share. It's interesting to see what Elon Musk will respond to that. What I want you to take away from this video and from this entire story is that trust and law and public markets behavior are things that are unpredictable, especially with a guy like Elon Musk. He can do these kind of things that for us it's pretty much obvious to be not in a good intention and still get away with it in a good way. He will win no matter what. His losing position is paying what he's agreed upon before. His winning position is getting the price lower. There is no scenario in which he's really materialistically harmed. My personal thoughts on it is that I hope this deal will close at the said price and there will be no renegotiation, because if Elon Musk will succeed on getting the price down after agreeing to a price, and he will not pay anything material for that, personally or otherwise, we will see this kind of behavior more and more in the markets, which will make the market much more unstable. So I hope this will end in a good way for the markets in the future. And with that said, I hope you enjoyed this video. If you did, leave a like, leave a subscribe. I talk a lot about public markets and investing, and I'll see you next time. Bye bye.